Hello, Warriors. Probably I was about 30 seconds late. Anyone worried that I wasn't going to show up? All right, this is our guest today. Specializes in the energy space. So it's going to be interesting to talk to him in light of Saudi Aramco deal and crude in this range. And I'm going to have Adam Button here tomorrow because Adam wants to talk about the problems in the shale oil. So stick around for this interview. People paying us a lot of money to come to speak at their gatherings. So nice that he'll come and do this for us for free. So here's the euro, threatening, 111.5. Am I okay? You know what, Forex gal? I'm as brilliant as a diamond. You better put on your shades, especially when you go out and look at the full moon tonight. I want to welcome our viewers from investing.com. So here we are, 111.50 is going to clear the way for 114 in my view. Really developed nicely, and we're right here on the verge. So we start closing over this 200 day. I think we have something going. A lot of tests back at this line, but the rule for a falling wedge, which is what this cone is, if you're not a technical analyst, 100% retracement is possible, and just a measured move from here is going to take it close. So dollar still looks bad, huh? You were going to say full moon? Yeah. So the dollar broke down. We've taken out last week's lows. Said last week's lows were kind of a theme for me, do or die. So I don't know. I wouldn't be buying the dollar here. You know, watch, you know, me be made a fool out of, but to me, it looks like it's breaking down. I think it was the chart of the day yesterday, and our team thinks that, you know, this breakdown, if it follows through, 96 is there in a heartbeat, and there's your weekly 200 at 96. So pay attention to those charts of the day. It's real nice free content. But if you need more and you're tired of just the tip of the iceberg, check us out. I believe there's a link in the room. A couple of other markets I want to touch on. I'm short the yen, anticipating a breakdown. Okay, so again, doesn't the yen look a lot like the dollar? I know it's too busy. I have all these fibs in this range, but we're threatening support right here. I see a lot of empty space. If the dollar's going to 96, I don't see why we can't correct this whole advance. Trade down towards 107, 106.5, which I think was going to tie in with this. So, you know, I was talking about the 2-week off number, and it was 3143, 3143.80. So we're 600. Look at all the tests we had before it got through last night. And here's an observation I have on the S&Ps. So here was last week's candle. See that? Now, wouldn't you have thought that new highs were a layup with the Fed? You know, maybe you know, rolling back tariffs or new tariffs aren't going into effect. That's what it is. And we have the UK election today, but we did not make new highs after that Friday close. We're lower on the week. Where did we close last week? 31.45. So, I mean, you know, 7 handles, that's could be blown away in 5 minutes. But I'm just saying that, you know, we start threatening. In fact, we already are. This, be careful. So with 1 day left, I think we're going to have our first 2-week reversal in quite some time. So trying to hold the 50 on the 1 hour. It looks heavy to me. Yen looks heavy. Dollar is breaking down. S&Ps couldn't make new highs. I would call this the third attempt, right? Because the highs were made here, right? Here was the first attempt, pulled back, and now the second attempt didn't even take out this high, Friday's high. So we have an inside week going. Actually, a 2-day reversal takes place at 31.3370. So about 5 handles lower from where we are right now. Euro pound, Blake had a head and shoulders pattern drawn yesterday. I don't know if it was on the 1 hour, but he had like a diamond here and kind of a diamond here. So far, shaping up, almost looks a lot like the euro. And I think that, I've always believed that a bear move in the dollar is always, led by the euro over cable, kind of like I used to look at the Swiss against the Deutschmark before we had the euro. Okay, and the Deutschmark leading was bullish. So anyway, pretty similar ascending triangle. Trying to get back to this throw over line here. Looks good. I didn't buy it because I was waiting for one more smash. Sometimes I wait for one more jiggle. I'm still doing it. Who knows what could happen on the election tonight? So not actually I feel more comfortable being in the yen than being in any kind of having any kind of European exposure going into this election. So I think that's what I wanted to cover. Euro threatening the breakout, dollar new lows. See if the yen could break down, and watching the S&Ps. Also, this could be good to talk about oil because there really hasn't been that much to talk about. I'm still holding some stuff from this candle last Friday on the jobs number, and it's just, comatose. Are we distributing here? I think you'll know that there's some vulnerability in the oil market if we start trading back under this 57.80, or at least closing back under the top of the range here. So I believe that's mainly what I wanted to talk about here, Blake, and you better get a nap in this afternoon.
Oh, it's going to be a late night.
Yeah, so I mean, you're just going to go from 4 in the morning till 2 in the morning, like
well, I don't know if we'll have to go that late. I'll probably have to go till about 10 o'clock tonight, which will be 4 in the morning UK time. Before we
never even used to go to nightclubs until 10 o'clock.
Yeah, but you never used
to.
I
can't make it to I haven't seen a New Year's Eve midnight for many years. I just can't make it.
I don't make them much either. I did it a couple years ago.
It's my schedule.
I did it a couple years ago, and it was brutal. It was for sure. Good morning.
Good morning,
Dale. Good morning, everybody.
Good morning,
hey, good morning, Steve. How are you?
Good, mate.
Steve makes it up for New Year's, don't you?
Oh, he stays up 48 hours at a time.
I remember, this conversation reminded me that the most important item that I had to take out when I was going clubbing during my university years was sunglasses. Because, no, I'm not kidding about it.
You'd come out and be light.
Yeah. And trust me, you didn't want, after being up so many hours, you really couldn't stand the sun.
Yeah, so vampires are like that, man. They don't,
yeah, so sunglasses was a really
You were already supposed to be back in your, your box before the sun came up. So.
Yeah.
All right,
now,
so
probably
Blake,
if I do that one day, I'm going to be dead the next one.
Yeah, you're retired officially. So, Blake, what do you think?
iPhone shipments in China dropped 35% year over year, 35.4.
Bullish, right?
Yeah. That's
maybe that's what took the S&P down.
I was going to say, that might have been one of the things that took down the market a little bit here, just a little. Because, I was sitting on Bloomberg trying to figure out market came under a little bit of pressure, and that's the best we could find. But anyway, that's neither here nor there. It's not like the stock market's going down. It's just it's just coming off a little bit, a few points. You know, it's like, wow, whoa, a 4-point S&P move. But you know, after you've seen this massive move into all-time highs, does it really matter? I guess you could say, well, we're not hitting new highs. That's one, but everything that happens from here is all you guys know, it's all dependent on this weekend. I mean, today will have a little bit of impact, more so for UK stocks and what happens in the with the pound, obviously. But regarding the stock market, it's all about this weekend, and it's all about the tariffs, and how the stock market responds from here is purely based on that. I mean, it's a pretty simple equation. Tariffs are put on, and there's no walking back of the tariffs. We're probably not going to get a trade deal, and we're probably going not till the election, after the election. And you're going to see the stock market really sell off. And then obviously, if they roll back the tariffs and they meet some of China's, demands, if you will, then we're going to see the stock market continue to rally. And but it puts Donald Trump and his administration in a pretty tough predicament, because you got to say, okay, I'm tough with China, and I'm going to, continue to be tough with China. Stock market comes down. Let's just say, I'm just going to use a round number of 10%. Let's say it just comes down 10%. But that will be his fighting stance at, for the election. Flip side is, if he, bends to, China's demands now, which, China's in the driver's seat. If you guys don't believe it, I that's just something that I believe right now, because they look at his current political situation and say, well, he's going through an impeachment, and the polls are probably fairly close. There may not be a very good contender, but still, if we have a little leverage now. So if they I think they're in the driver's seat as far as the negotiations at this point in time. But if China or if Donald Trump decides to meet China's demands at this point, will he look at as being weak on China and just basically, taking any deal he could get for the election? And then, then now he's got less stance to fight in the election moving into next year. So I think he's put in a little bit of a box right now. And with that being said, they're having a very high level meeting today with all of his trade advisors, Navarro, Kudlow, Lighthizer, Mnuchin, and high level meeting on are they gonna remove the tariffs, or are they gonna go ahead with them? And that's happening today. And there's a lot of China rhetoric coming from their multiple media outlets about the backlash that they're going to receive if they go ahead with the tariffs. And so it's going to be very interesting the next couple of days. On top of that, we have the UK election, which is obviously it's a big deal for the cable, and it's probably a big deal for the FTSE, and it's going to be a big deal for the euro. And so very, very tonight's going to be a long night, and I'll say this, that I'll be up late tonight. And if you guys are not ForexAnalytix subscribers, let me just I got to plug our company really quick, because I'll be in front of the computer all evening, and so will all of our chat room. And if you want to try out ForexAnalytix, is a great time to do so. It's $1 for 10 days. Try it out, because it doesn't matter if you're using the light version or the premium version. So the light version is $19 a month. The premium version is $119 a month. And keep in mind that the premium version gives you access to all the patterns in play and all the different types of analysis. The light version just gives you the basic technical analysis, but you don't get the chat room, and you don't get the advanced analysis. But you always get the app, which is great, because when you're using the app, you get all of our notifications, updates via mobile phone, But while you're trying ForexAnalytix, it's only $1, and you get the premium version, and you have access to the chat room. So here's our chat room. So you guys in the chat, you guys are on Jumbotron if you want to say hello. You know, this is where I'm going to be tonight, and you can see that you know, I'm chatting in here. So is Amanda, Stelios, Steve was in here yesterday quite a bit. Paulie's in here all the time, and we have anywhere between 70 to 120 people in there throughout the Iris says hi mom, and Dominic says hi to Iris's mom, and Nidish is from Singapore, and he thinks he's funny, but he's really not. And then there's Stelios, and so, you know, you guys are all in the this is where I'm going to be at tonight, is in our private chat room, and you have access to it if you, even if you you know, take a trial and you start using ForexAnalytix. Great time to be there, especially for tonight, because it's going to be active. Sorry guys, I'm taking you back off Jumbotron. So let's, and I just wanted to plug that really quick, because so you guys know where I'm going to be tonight. Last night while I was in the chat room, actually, I picked up a little euro pound. You know, it's Dale pointed out a little earlier that we had a, you know, I was showing you guys an inverted head and shoulder pattern. Last night it came off to 84.20. It was trading at 84.24. And I said, hey, you know, if the pound was extending its gains in Asian trade, and it was very divergent, and I'm like, this, it's just taking out stops right now. So if you guys want to do a, you know, little counter trend trade, pick up the euro pound, you know, here, and I did, and then I sold it this morning at 55. So I sold it when it, you know, it rallied. Now, as you can see, technically, I'm not convinced about the euro pound while we're below 84.70. I just figured we'd, you know, get to the neckline today. Now, will the euro pound break out? Sure, it could. You know, we have the ECB meeting here, the press conference coming up in just about 15 minutes, 13 minutes. That's going to be a big one. I'm going to be leaving for that, going back into the chat room, because Christine Lagarde, this is her very first ECB meeting. Everybody expects her to very much carry the same torch that that Draghi had. But if there's any kind of shift, that's where we have to be a little careful, because, you know, the euro dollar, not only is it heading up to really key resistance up here, let me just go ahead and put this up here, very key resistance at the 111.80 area. You have 161% extension at 111.65. We're consolidating at the 127% extension, but more importantly is the 200-day moving average, which comes in, you know, right at 111.50, 111.55, roughly right around there, depending on, you know, who you're using. Now, some folks were saying, hey, don't you see the 200-day moving average a little lower? It depends on what feed you're using, but if you're using like Gain Capital, whoops, I'm sorry, let me go back to the euro here. I don't know why I just typed in the pound, but you can see the euro dollar on the daily. Well, this is forex.com. Looks like maybe they adjusted their 200-day moving average. It's interesting because it had them breaking, but no other data feed did. So maybe they adjusted their feed, which is interesting. So, but I use I use FXCM's feed when I'm using TradingView predominantly, but I go to different feeds if I want to muck up or draw up some charts. So that's what I do. But regardless, the 200-day moving average is coming into play. There's a lot of resistance up here in the euro, but, you know, and this is channel resistance too. You can see this big channel resistance. Flip side is if we close above 112 or 111.80, it's pretty bullish. And, you know, it's not just the euro that's breaking out. It's not just the euro that's breaking out. You got the pound that's threatening. You know, you've got the Aussie dollar, you got the Kiwi. You guys can go through all the majors and see, you know, every currency that's breaking, the dollar is breaking down. I know it's bouncing today, but, you know, there's a lot of pretty key developments happening. I want to bring to your attention the US dollar Swedish krona. This is one of those that I don't trade often, but I trade periodically. But what I do like about the US dollar Swedish krona is actually it tends to lead the dollar a lot, not all the time, a lot. And especially when the dollar starts moving, you start to see this, the Swedish krona actually sometimes front run the rest of the dollar pairs. Well, as you can see, the US dollar Swedish krona is breaking lower here. Yeah, we do have a, you know, you can say it's a head and shoulder pattern. You know, there's a shoulder, here's the head. You know, I'm just kind of roughly drawing the stuff. Don't harass me for not drawing it well. But you can see the a nice head and shoulder pattern, however you want to draw it. You know, it can go like that, whatever. But you can see it's, you know, trying to make its move. And could it be signaling that the rest of the dollar pairs might come under pressure? Well, you know, I look at the euro, and we've been faced with euro rallying to these levels and immediately reversing. I mean, you know, intraday too. It's like you can see 4 hours probably a little bit better to look at. You know, you get up above, you know, 111 and it gets swatted down. You know, 111 swatted down. Now we're up here right now. We're holding, and the longer it holds up here, the more bullish it becomes for the euro. You guys know I'm overall I'm a dollar bear at these levels, and I think that the dollar is, and I know I've been saying it, you know, for the last couple months, and we've had a lot of false starts, but I think overall the dollar is, you know, due to pull back here. There's more and more moanings amongst the professional community too about the dollar currently, but the proof is in the pudding, and the proof is going to be the euro above 111.80 or 112, where we really start to go, okay, we got a daily close above these levels. Now I have to start being you know, I have to be serious about, you know, a dollar breakdown is with the euro breaking out. So, or you know, breaking out above 112. But I think it is a pretty good possibility, and I think that, you know, the dollar positioning right now is pretty long. So an unwind of dollar longs seems like a pretty realistic expectation to me. Now, where is that going to take the euro? You know, my argument for the longest time has been probably not too far. I mean, we might be able to get up to 114, 115, but if you throw in some risk aversion, that's when the euro could really extend its gains. For, you know, you'd probably be surprised when you'd see the euro rally to, you know, 118, 120, and you're like, oh, how the hell did that happen? Well, you know, probably in tandem, you had the S&P, you know, moving down quite aggressively, because it is a funding currency. The euro is a funding currency. And when you see an unwind of those moves, that's like, you know, the dollar Mexican peso. If I see the Mexican peso come down dramatically, that's going to be the dollar in essence as well. The dollar will come down as well. So I think that there is risk for euro upside. How much it can extend really is more based on the current risk environment, which, you know, is to be seen. And I think it's, you know, we'll have more answers over the weekend and as we approach the year end. So big events happening today. Obviously the UK election. You know, we have
Gold's trying to come out of here too, Blake, and I know you pay attention to that for your overall dollar view.
Yeah, you know, if you are a ForexAnalytix subscriber, you know,
good segue,
gold,
huh?
Well, yeah, I was just going to say the gold intraday chart.
Yeah,
a little bull flag pattern that was developing. Yeah. You know, let's see if we're breaking out now.
Come out of it, I think.
Yeah, let's take a look here.
Above 1485, I think gold is gone.
Oh yeah, okay, definitely.
Another $10.
Yeah, so we're coming out of that little bull flag pattern now.
Yeah.
And so yeah, above, you know, 1490, Steve, yeah, 1500, gold is going to be gone, because we have this, you know, very big pennant, and that would also suggest that we have a big pennant that, you know, is pushing towards 1700, I think, is what we look at. Let me see here. Clone.
The long-term 61.8 from the all-time highs is at 1586. So I think that's an easily achievable target if we break out the first target.
Yeah. That would be actually, it's the
we're there by the spring, Steve.
Yeah, we'll see. You know, Goldman's looking at 1600. They're sticking with their forecast, and I would say mine are probably a little bit more aggressive here going into next year, but move above 1700 doesn't seem unlikely to me. And remember, as talking about gold, this has been a very shallow pullback. It's less than a 38% retracement of this last move. That is technically a bull flag pennant formation textbook. So yeah, a break above 1500 is very bullish, and that would be very bearish for the dollar. So just keep that in mind if you guys are trading. All right, and also it'd be bearish US dollar Japanese yen. That's one other thing that you should always think about.
But by the way, your favorite USD MXN is also at the precipice of a breakdown from that.
It is, but if you and I'll let you show that chart, but again, that has more to do with this weekend.
Indeed.
We keep the tariffs. That dollar Mexican peso will be trading up at 1950 before we can even blink. If we roll back the tariffs and roll back the September 15th, I think it's September 15th tariffs, December 15th tariffs, then I think the dollar Mexican peso trades well below 19. So it's all about what happens this weekend regarding the peso. I think you got to be a little careful with it down here, but it's one of those situations that it might be gapping over the weekend. It could gap down below 19. It could gap up to 1940, so.
Good weekend to be flat, huh?
It is. I mean, unless you're a roll of the dice type of person, Yeah. But Steve, I want to pass over to you. Guys, remember, if you want to try out ForexAnalytix, this is the time to do so. Make sure you download the mobile app. Make sure you jump in the chat rooms. And Stelios, I'm sure, is here. And Coach, thank you very much. I'll see you guys bright and early tomorrow morning. So,
okay.
Thank you, Blaker.
All right, thanks,
Have
guys.
a nice trading day.
Good luck tonight.
Bye-bye, mate.
Thanks, you too.
Hey, guys. How you doing?
Hey.
Hey, Stel.
Hey.
Steve.
So we have the presser starting in 2 minutes or so.
Indeed.
Going to keep an eye on
ECB.
that. Yes, and we want to see. It's particularly important, even though there was no change. Obviously, going to be no change in rates.
Because of Christine.
Yes, Miss Christine. Let's see what she's going to say.
I think the risks are. The market is very, very certain that she's going to be very dovish, and
right.
it is a good likelihood. Let's be honest, right?
Yeah,
but
yeah.
What I'm trying to say here is that, if she sounds like more moderate, I think the market is going to react bullishly, having to do with the euro.
I agree that the market is looking at it one way, but on the other hand, just remember, she has said already that she doesn't think that the lower bound in rates is at 0%. So she's open to anything. But I agree with what you say. I think most people are thinking she's going to be dovish, so it's a little bit dangerous potentially. So
you think she'll talk about whether she's dominant or submissive?
I don't think there's any doubt in that one. So let's.
Where my head's at this morning. All right, go ahead. Sorry, guys. And sorry, ladies. Anyway. Bring my fantasies into face, It's not fantasy face. Go ahead, guy.
Obviously, the main event of the day is the UK elections, and it seems that the polls had been closing a little bit. I was reading today that the booking agencies are actually giving better deals for hung parliament now this morning. Amanda said in the chat room that apparently more young people have been the turnout for young people has been increased, and so and we know that young people tend to vote center left, so they're going to be supporting Corbyn, and so it's going to be a tough one. I maintain that I think we're going to see a slight majority for the Conservatives, but obviously you never know. That's I've been looking at the polls all these weeks. Obviously, you can't really believe in polls that much, but it's a good indication. And the MRP poll also gave Conservative majority. So
By the way, sorry to interrupt, Celia. We just got data.
PPI.
everything is actually worse. Core PPI lower, US initial jobless claims.
Oh yeah, 40K
20%,
higher. Yeah, okay.
20% higher than expected. So US data negative. I don't think it's going to move the needle ahead of the ECB, but all data were more or less negative.
Okay, thanks for that. I'd forgotten about the data. So yeah, to finish off with the UK, I mean, obviously the result is going to be, I think it's probably 50-50 whether we get a hung parliament or a conservative majority. I think we might just get the majority, but let's see what happens with that. And what else do we have? You know, nothing yet on the China issue. We're waiting for the 15th of December. The Chinese did say yesterday, at some point, among all these headlines flying through, they did say at some point, look, you have to remove these tariffs on the 15th and not apply them. Otherwise, phase one is gone, is off. So there's a lot of threats on either side, which
it's really so funny and so ridiculous. We've got to the point that they're threatening there's not going to be a phase one deal, and phase one deal is
an agreement
nothing.
To continue, basically.
Yeah, it's nothing. Like it's nothing. It's a balloon. You know, it's like phase one is let's continue so we can get to something. I mean, which shows exactly what Blake was saying. I mean, due to political circumstances as well, the strong hand currently is definitely on the side of the Chinese, because you know, even by dissecting the deal in several parts and stripping out everything from phase one, they're even playing tough to get in phase one, and you know, he's going to have to make a choice, Trump.
Yes, indeed.
He'll have to hold hands with Xi like he did with Kim on the
Kim,
board.
yeah.
And I guess even holding Kim's hand really hasn't changed their relationship. He should look for another boyfriend.
But really, who knew, right? It looks like we're going to get Brexit closure before we get the US-China closure. Incredible.
It is likely, as it seems. It is very likely. It is very likely. And by the way, adding to what we were saying before about, you know, the importance of current levels, keep in mind also that look at the DXY.
Yeah.
The DXY is currently testing this range's support. It closed yesterday here, and so far today we have like a doji. And look what else we find, just, you know, a few pips lower. I mean, we have this ascending channels trend line support. So if for some reason Lagarde's press conference pushes euro out of this 111.80 key confluence of resistances, the DXY at the same time is going to be breaking below that huge confluence of supports. And people keep underestimating the importance of these events, because from a technical perspective, it's going to be hugely important. And it's not like magic, you draw some lines. I mean, these lines have mattered to the market. And the main reason they matter to the market is because traders use technical analysis to place their orders. So, you know, once these levels start getting tripped over, you know, it's going to start likely a chain event that is going to be very difficult to reverse. So I think we should be very, very careful. Lagarde, by the way, still just started speaking, right? I see her on Bloomberg.
Yep. Yeah, I'm going to keep an eye on the headlines.
She's talking about inflation from what I see.
Let me know if she says anything about me.
Some initial signs of stabilization. In line with our previous expectations.
How does she look?
She's talking about resilience of job market. So far, she hasn't made any dovish statements. So let's see. Yes, she's talking about stabilization.
Yeah, her first meeting, I thought, it's unlikely she's going to fire any fireworks, right?
Yeah, but you know how it is, Telio. The market is pays too much attention, and one word here, one word there might be interpreted, one way or another. Misinterpreted, overinterpreted, you can call it whatever you want, but it is likely.
Yeah.
Lagarde in particular, easier borrowing conditions for firms and households are underpinning consumer spending and business investments.
Sounds like Powell.
Yeah. So far as you see, the Euro USD.
They have the same script.
Oh yeah, that's the only certain thing. All the big central banks more or less play out of the same playbook.
Same talking points.
Yeah. So far, Euro USD at the highs of the day, but not breaking out yet.
It will.
Let's see.
We used to joke about what color tie Draghi is going to wear. I think this time is going to be what color Hermes
Scarf.
bag. Hermes bag, right?
Yeah. There's not going to be any betting about the color of the hair, though. That's constantly white.
Yeah. The silver fox.
I'm going to keep an eye on it, and anything huge comes up.
You mean on the hair, or?
Huh? Yeah.
Yes, so it's a highly accommodative policy still needed. Inflation outlook
stands ready to adjust all instruments.
Subdued. Will closely monitor inflation development. So more or less, one of the same, nothing unexpected.
Same thing Paul said.
Yeah.
What's their target for inflation, Stel? 2% like ours?
I'll tell you what their target for inflation is.
Any?
Any target higher than what you have at the moment.
And what is it now?
Right?
The ECB has held the below but close to 2%. It used to be below 2%. When it actually reached 2%, they started moving the goalposts, and they didn't need to move them further, while due to the US having higher inflation, the Fed had to move the goalposts even further, because I remind you that with the US we had less than 2%, then we got like 2%, then we got symmetrical 2%, and by asking the question, okay, what does symmetrical 2% means? It means that we had some years that inflation was less than 2%. So for some reason, it must have been the most stupid argument ever made in the history of economics. We need to make sure we compensate for that. And it is a very stupid argument for three reasons. The reason number one is because for some reason, central bankers are trying to persuade people that zero inflation or very low inflation is something negative. It isn't. Even deflation isn't something negative, and history has proven that, but they've persuaded everybody that it's something like horrific. Now, the fun part is the following. If we make the assumption that, okay, you consider low inflation to be dangerous because, let's say, it gets you closer to deflation. Okay, so why does it matter if you had a year of 1% inflation 8 years back? That year is over. You didn't end up having deflation. So why exactly would you want to compensate by making people's lives more expensive today? It makes absolutely no sense. I mean, if the only argument is we want to make sure that we have a cushion to avoid deflation, why do you need to compensate for years that have passed 5, 6, 7, 10 years ago, and you know that they didn't bring deflation? There is no argument. I mean, it's plainly stupid. ECB sees 2020 economic growth at 1.1% versus 1.2. ECB sees 2021 economic growth at 1.4 versus 1.4. ECB sees 2022 economic growth at 1.4%. Risk still to the downside, but somewhat less pronounced. So far, the market doesn't interpret Lagarde.
Well, this is a prepared statement, right? So the meat is going to be in the questioning, I think.
Yes, always, yes. But even the prepared statement could have been more dovish, Stelio, right?
Oh yeah, of course.
Euro pound coming out of the hole big time.
Yeah, look at here, we're testing resistance. Let's have a look at Europound since you mentioned it, Coach. Europound, yes, making a big move. I'm probably already stopped out at my trailed. Yeah, I am definitely stopped out on my trailed stop on the last half of my position. I had it at 84.50, so now I'm out of that position, and I took half of it out in my initial target here at 84.80, and as it seems now, the other half also at the same target because that's where I had trailed my stop loss. So yeah, nice reversal here. We had set two potential reversal levels for the Europound. One of them was 84 cents and the other one was 83 cents because both of them were important support resistance areas in the past. So as it seems, it's reversing from here. Of course, we need to give it a little bit more time. Needless to say that USD Swiss has broken below this 98.40 key area of support, and pretty sure that the DXY, if something doesn't change, isn't going to need more than this day to break down from this ascending channel as well. So it's all going to depend about what happens within the next like 30 minutes. Usually we get a reaction from the press conference within the first like 10 questions. The market pays more closely attention, to the first questions, because then they get a good indication about, which direction it's tilting. By the way, speaking of the dollar, $1 pair that seems to be turning lower today. Stelio, did we have any news from the pound today?
No, it's just today. Not that I know. It's just leaking now higher, right? The euro pound is leaking higher slowly.
Yeah, definitely. We know that the euro pound is one of the most liquid currency pairs. So definitely there is some spilling over from the euro pound rebound in this move lower in the pound. But I'm wondering if there was also anything else, because so far the daily candle in the pound is developing to be a decently bearish one from this.
Well, it has been a pretty strong move, right, going into the elections.
It
rally
has.
for the pound over a couple of months now. So it's going to give something back on the day. I mean, could be a lot of things, but also like we said earlier on this webinar, the turnout on young people has been higher, so that might be slowly moving the result. I mean, I don't know.
Yeah. If it was up for in general, any leftist parties, kids should be voting from the age of 5 or whatever. They would promise them candies to vote or whatever. I don't know. Having to do, by the way, with USD NOK, USD NOK once again turned lower, once again making an attempt to attack this 907 neckline. I think this is the last chance here, because we're going to completely lose symmetry from this head and shoulders formation if we don't do this move, now. But we are getting close. I mean, below 907, 906. That's going to trigger quite a decent move. I think that the next stop is going to be at 892. So this might be a nice, a nice upcoming trade. Of course, if for some reason crude accelerates higher, that will somewhat help. Having to do with USD SEC, I was warning in advance. Blake showed it as well. I was warning in advance some time ago that breaking below this ascending wedge was a big development. Then I said that we have this head and shoulders formation, and look at the move we made yesterday here in the USD SEC. We've clearly broken below this head and shoulders formation, and the next target is now actually quite a lot lower. If we want to measure this, let's have a look at it. That would imply a move down towards 910. So quite a decent move here. Quite a decent move. And it's also, the same area is horizontal support resistance area. So USD SEC has already done the move. Let's see if euro is going to follow, because very usually, the USD SEC might lead the way. Speaking of which, that also means that probably we have a nice breakdown in the euro SEC. Look at this. This is also a nice play if you're looking for uncorrelated trades, to the usual suspects that are affected, a lot by, like US-China negotiations and stuff like that. Look at this move in the Eurosec. Eurosec was building this ascending wedge for quite some time. We had a false break higher, an overthrow in essence from there. And then we turned lower, and now we seem to be breaking down from this huge formation. So Eurosec looks like a very decent trade in any rebound given. Obviously, we're very oversold in the short term, but I think that any move, if you get lucky and catch a move back to 1060, I think that's going to be quite a great opportunity. EuroNOK might be more or less in the same predicament but lagging. I mean, who knows? We might see the same type of move from EuroNOK. I mean, this false break higher. I don't know. Perhaps it's some kind of a fractal that is lagging behind Eurosec. It's going to be interesting to see if it's going to follow the same price action, but with somewhat of a delay. Stelio, is the press conference starting? I mean, is the question part of the press conference starting?
Not that I don't think so yet. I'm gonna have a look. I don't think so.
Because I see her looking at the audience and not reading anymore. That's why. Euro USD has pulled back from that resistance, by the way, and it's now unchanged on the day. So this resistance, for the time being, has held. This confluence of resistances, 200 daily moving average and descending channel, they held perfectly. But as I said, it's too early. We need to go through the question phase first. And here's the DXY responding equivalently from this rectangles support and just above the channel. So let's see if actually the dollar can hold here. It's up to Lagarde, more or less. Okay, Stelio. Lagarde is discussing her strategy review proposal. Okay.
I'm here, Steve.
Okay. I prefer Yellen. Lagarde just reads the speech they wrote for her. Yeah, let's see how she does in the question in the Q&A. Don't forget that I bet it's very, very stressing. I mean, she hasn't done that before, right? It's her first press conference in this role, so I think we have to be a little bit lenient with her, in this respect. There is no question. She's a smart woman. She's a very strong figure. I mean, I
dominant
think
personality.
She is a dominant personality for sure. Yes,
okay.
She is, and she's very competent for sure. There's no question about it. Doesn't mean that I agree with her policies or whatever, but
yeah.
but she's definitely.
I don't think I would be nervous.
I think it's easy to say, at the comfort of your home, but it's very different being in front of like 100 cameras, reporters,
well,
all
Joe Perry does
media.
it all. Joe Perry does it all the time. He doesn't get nervous.
He doesn't show that he's nervous, but especially the first few times he was.
He didn't have to wear Depends when he went in.
Okay, let's until we start getting some movement, based on her Q&A. Let me go through a couple of things. First of all, you remember a couple of days ago I mentioned that having to do with the Aussie, it's all about this descending channel, and a little bit higher from this descending channel, we find also the confluence of the 200 daily moving average at 61.8 and the previous high. So keep in mind that the Aussie is actually starting to test these levels. And needless to say, if we see a daily close above 69.30, there's going to be more upside following. So the Aussie can actually start overperforming here and doing some catching up to the Kiwi. Speaking of the Kiwi, just look at Kiwi's price action yesterday. Kiwi was lower on the day at some point, and look at this.
Let me remind our attendees that Steve made everyone aware at the right shoulder at about 63.20 before the breakout.
Yeah, and we said that, you know, if that breaks out at 64.30, it's gone, and you know it's on its way to the target at 66.50. And I think the same thing can happen here in the Aussie USD with a delay. I mean, it closes above 69.30. I think we're going to see an equivalent squeeze here. And this is one of the reasons, perhaps the fact that it's lagging. If you remember, I said yesterday, Coach, that we have a potential reversal here in the Aussie against the Kiwi.
Following through.
Yeah, we're seeing some follow through today. So if we get that break in the Aussie, the Aussie is going to have to do some catching up to the Kiwi, and that might lead the Aussie Kiwi to rebound even further. By the way, now the Q&A phase just started because I do see a reporter asking her. I can follow his questions.
Also, the action in the metals is very constructive for Aussie as well.
Oh yeah.
So
yeah, absolutely.
You have that going for it too. And they were the weakest currencies while the pound was going up. Go ahead.
Today, copper is pulling back from the 61.8, but don't forget that copper has already delivered two breakouts, one from this descending wedge and the other one from this pennant. So, I mean, it makes sense that it would pull back at some point at the end. It is doing so from the 61.8, but it has already led the way higher from the Aussie. So the Kiwi has made the move higher, copper has made the move higher, and Aussie was lagging. And perhaps it's time for the Aussie to do some catching up.
A little bit of a reflation trade going on, buddy. Huh?
Yeah, and having to do with the metals, as you said, palladium accelerating higher. By the way, keep in mind, palladium is now getting closer and closer to the completion of this cap and handle formation at 1950, 1960, whatever that is. So we're getting closer and closer to that level. And, you know, I'm expecting that we're going to see some deeper pullback when we get there. And look at this. Platinum is also attempting once again to break from this long-term descending trend line resistance. Now, you know, I want to get more evidence for that. In essence, I want to see a higher high. But platinum is also making an attempt here. Gold is testing once again this 1485 resistance zone, and you can see that this descending trend line resistance is passing a little bit higher from 1490. So a daily close above 1490 for gold. I think that's going to be it. We're going to be moving a lot higher. Silver has also rebounded from there. It still has some way. I think that the key area to watch here for silver is 1725. So yeah, I mean, we're getting close to many important levels for all those instruments. And if we do see them breaking out from there, I do think that the market is going to produce some very hefty follow through. ECB's Lagarde 2022 inflation direction is good, but not at objective. Okay, they have absolutely no idea what's going to happen this year, but they want to predict 2022. I love that. TLTRO 3 take up neither success nor failure. Okay. Lagarde also talks about talking to a new audience, not just us journalists and financiers, an implicit understanding that the public, especially German savers, need to understand what exactly the ECB are up to in simpler terms. Yeah, I don't know if Germany is ready to play ball with monetary lunacy, and I wouldn't be willing if I was them. Lagarde, when I don't know, I will tell you that I don't know. I don't believe her in that, because if the question comes, if a recession is coming and she doesn't really know, she's not going to say that she doesn't know. She's going to say that no. So, you know, she'd better not make promises that she can't. Okay, so let's see CB's forecasts. Okay, so they revised higher the 2022 inflation target to 1.6%, but really, who knows? I mean, all that is. Okay, we have a friend here asking for USD ZAR. Nothing really has changed here. You can see USD ZAR is trapped within a large triangle, so you know you have to be patient here, whichever of the two breaks. Speaking of that, because we have an equivalent formation, the USD MXN, just pay attention to this, because USD MXN is also trapped in a longer term triangle, but we're exactly on support. So if you really like the USD MXN to the upside, you know, this is your opportunity. Buying it here makes all the sense in the world from a risk reward perspective. Placing your stop loss above this low, I mean, you know, it's a beautiful risk reward perspective. Even if we just rebound to retest this confluence of resistances at 1926, it still makes sense, right? But especially following the weekend, if we're lower from this triangle, I think this is going to be like a huge technical development, and there's going to be serious follow through to come. So I wouldn't be trying to fade this if after the weekend we're still trading below it. Euro USD more or less unchanged. I mean, it has regained some of the lost ground, but still below that confluence of resistances. So the market is still undecided. The market doesn't have yet the required momentum to break out. Of course, sometimes you might see the breakout happening after the press conference. We've seen that in the past. The market sometimes might need a little bit of time to digest, you know, the information. We're very aware of the side effects of negative rates. No, I'm pretty sure you're not. That's my personal answer. I'm pretty sure you're not. Negative rates are devastating for any economy, because negative rates penalize the steam engine of development, which is savings. Savings is the basis for borrowing. Borrowing is the basis for investment. Investment is the basis for economic growth. So negative rates is even zero rates is very, very, very bad monetary policy with devastating long-term effects. Palladium, by the way, has now broken the all-time highs that gold had posted in the past, which means that palladium is currently higher than gold has ever been in its history. That's quite a development, and you should be careful when developments like that happen. And it's all over the news, because you know how it is. Now we're going to get all the bullish headlines for palladium, and those usually come just around the corner of a reversal. And as I said, we are also getting very, very close to completing this cup and handle formation. So I would be very, very careful here with palladium. The easy money that were to be made in that breakout have already been made. I think trying to buy palladium up here is outright foolish.
People who buy headlines today sell newspapers tomorrow.
Newspapers tomorrow if they're lucky, because selling newspapers at least is a legitimate job, right?
I don't know. Everyone gets their news online now. So if you're forced to sell newspapers, I think you have to have a stand with a laptop and digital news.
You have a point, Coach.
Yeah, anyway, it's not what it can't even do that anymore.
Yeah, it's not.
That was my backup plan. Anyway, anyway, great review, Steve. Huh?
Hi guys, good morning. Could you please evaluate Aussie against the yen? Yes, the Aussie against the yen, actually, we were looking, it was looking like a beautiful formation for a potential breakdown, but as you see, it never manifested. So it's holding up quite nicely. Now, does it look really bullish yet? No, it doesn't, but you know, it can easily end up making a move like that before turning lower, right? So, I mean, we have a strong confluence of resistances at 76, so 76.20, so we can easily see another 150 pips of upside here. Do we have an interview today, by the way, Coach?
We do.
Okay, who do we have?
Dr. Anas Alaji. He's an energy economist.
Okay, perfect. Okay,
yes.
That's going to be quite interesting.
Yeah, I'm looking forward to speaking to Anas. Or have you wrapped it up?
Yeah, absolutely. And, you know, we're going to be in the chat room and monitoring what's going to be happening because Lagarde is still talking, so there's still possibility that, you know, we're going to see some follow through, some movement.
Plus the election tonight, I'm sure the chat room will be fairly crowded. So.
Oh yeah.
Well, good luck, Steve, and I'll catch you a little later on.
Thank you, Coach. It's going to be a busy day today, as you said.
Yeah. Okay. So
enjoy the interview.
Trade well. Anas, I'm going to make you a panelist, and since you're not showing the screen, Steve, can you stop sharing the screen, and I'll share mine.
Done.
Thank you.
Good morning.
Anas, so nice to meet you.
Nice to meet you.
I really appreciate you taking time out today to be with us. And I don't know if you heard Steve talking about Lagarde being a little nervous with this being her first ECB announcement and press conference. But yes. I bet professional speakers like you and me, Anas, we don't get nervous. The bigger the crowd, the calmer we get, right?
Absolutely.
I mean, you know, I love to have a large audience. You know, I have attention deficit disorder. I can never get enough attention.
Well, I am the same. I remember the first time I walked into a lecture room with 520 students.
Okay.
And the fun part was the microphone did not work, so I have to speak without a microphone. And I learned that I can project in this case, and I learned that I have a loud voice.
Okay. All right. Well, you know, I read about your background. Interesting that a lot of your education happened in Oklahoma. Is that how you ended up having an interest in the energy business, all things energy? What was it that attracted you to it? Or was it where you grew up in the Middle East that, you know, black gold was really one of the most, at risk and wealth building for major nations there? Everyone thinks about the price of oil there, don't they?
Sure. My playground was the ground of a gas station. My grandfather had a gas station, and that was the playground. So when people get sick from the smell of gasoline, I get homesick.
Okay.
And I got my undergraduate education in Saudi Arabia, and then one of my professors understood that I have a great interest in the oil business, and he told me to go to the University of Oklahoma because it was #1 at that time, #1 worldwide, not only in the United States.
Oh, wow.
So I had earlier interest in this than just coming to the University of Oklahoma, and I really enjoyed being there. And there was a time when the University of Oklahoma had the largest number of professors involved in the oil industry relative to any other university. Yes.
I didn't know that. You know, I know that in the, earlier part of the last century, a lot of the major finds were in Oklahoma, kind of gave it renewal after the Dust Bowl was finding oil there.
Correct, and probably that's what made the University of Oklahoma the recipient of money and other things and interest in oil.
Okay, so I want to talk about, I went over your website, I want to talk about what you're concerned about. And, you know, there are all kinds of concerns in the shale oil industry right now. Mainly what I'm starting to hear about is a lot of the debt that a lot of these fracking companies have taken on. It's junk right now at risk that could have some systemic effects later on, maybe next year. But you're worried about the quality of the kind of oil that's coming out of the ground through fracking. Can you tell us about that?
Sure. I think the whole debt problem is originated in the idea that those investments are going to pay off. So the problem of those companies is not the debt. The problem of those companies is they couldn't deliver what they told investors simply because of two factors. Something I called shale quality, and the other one is crude quality. So when it comes to shale quality, think about it this way. We have some areas here in Texas where about 40 to 45% of what's coming out of the well is natural gas and NGLs.
Okay.
And we are suffering right now from the curse of abundance. We have so much gas and so much NGLs that their prices collapsed.
Yeah, natural gas really took it on the chin again. It's every once in a while it comes to life. They call that market the Widowmaker.
Yes.
Have you ever traded it, nat gas?
Well, I used to work for Natural Gas Partners. The whole company was 100% gas at some time. So, if you are a producer in Texas in some areas, that gas is either flared or sometimes sold at a negative price, or you get some price for it. NGLs lost 50% of their value. So the only money you are making is on the 55% of crude, and that's it. So really what made the debt issue come to light is the quality of shale. If that shale was 100% crude with API below 45, no one will be talking about that debt issue today, even at $55 oil. The second point is, whatever left in that 55% to 60% of crude, that crude is light, sweet, and super light condensates and NGLs. And that is...
All right, for our listeners, you want to tell them what NGLs are?
Yes, that's natural gas liquids.
Okay.
That's different from LNG. LNG is liquefied natural gas. We have to manufacture it, basically. We have to make it. But NGLs is natural.
Okay.
So with the crude, we have a serious problem. Every addition coming online today, every net addition coming online today have to be exported because we did hit a refining wall in the United States. Our refiners cannot take that crude anymore. So we have to export it. And if you look at the forecasts of the International Energy Agency, for example, they are expecting an explosive growth in shale production. And my question is, look, if that's going to happen, we don't have enough refining capacity to handle it, even worldwide. And their response is, no, don't worry about it. Refiners will invest to handle it. My reply is, no, they are not going to invest. We are going to see some investment. But even when you look at some investment...
It takes a lot of time to build a refinery, doesn't it?
Well, there are two issues here. The first one is the shale cycle, as you know, is a short cycle. But when you invest in a refinery, it's a very long cycle. You are talking about 20 to 30 years. While the shale cycle is 2 years to 3 years.
Okay.
So there is a mismatch here. And the other issue is those refiners are not going to invest to handle the shale for a simple reason. All forecasts point to the fact that the demand of the future for oil is going to be on the heavier sides of products, not the lighter side.
Brent.
Well, even heavier. Okay. I mean, we are talking about medium to heavy.
Okay.
Because, for example,
where's that? Saudi Arabia?
Well, it is the Middle East. It's here in North America. Of course, we have Canada, we have Mexico.
Okay.
So all those crude, especially in Latin America too.
Venezuela.
Would be correct.
Okay.
But the idea here is those refiners are not going to invest heavily to handle the shale because the type of demand we are going to have in the future does not encourage investment. And therefore, we are going to hit refining wall worldwide.
Because of EVs, I mean, that's one of the reasons the Saudis gave for the IPO of Saudi Aramco to diversify away from oil. So if one of the major producers wants to diversify, who wants to make long-term investments for capacity? Is that what's going on?
That is, we can go back and discuss this issue because it is possible that this IPO has several objectives, and probably the issue of diversification is because of the money of the IPO, not because oil is in danger.
Okay, they need cash.
Correct.
And so, anytime you take something out of private hands into public hands, it's because they want to cash out.
Well, not really, because if you look at their objective, and I'm just speaking about what's written and what they are officially saying, their objective basically is to diversify the economy.
Right.
You need massive amount of money to invest in certain technologies.
Okay.
And that money is not available by borrowing, is not available from the private sector, is not available from the banks. So one way to do it is to sell some shares of Aramco to get that money to invest in some other things that can diversify the source of income.
Right.
And the objective basically is by 2030 and after, if there is any fluctuation in oil prices, the economy will not be hit as it's been hit in the last 40 years.
It's reasonable.
And they won't be a victim to politics and environmental politics, etc. So that's really kind of a main objective of the diversification. However, there is a big problem here. The problem is they have oil for 70 years, and they couldn't basically even produce technology out of that crude or out of that oil, which means that they are still dependent on Houston and Aberdeen and other major cities in the West. So if they fail to transfer technology of oil in the last 70 years, what will guarantee that they can transfer a new technology that never existed in the first place in that part of the world?
Nothing.
So there is kind of a danger here. I mean, it might succeed, but there is no precedent to support the idea. But what are the choices? They have no choice. They have to go and take this road regardless, because the risk, if they continue on the same path, is very high.
Okay.
So it is a risky approach, but probably they have no other choices.
Okay. All right. So when you're talking about this hitting the wall, the outcome would be frackers capping wells again, like they did the last time crude fell beneath $40. Is that what's going to happen? Or
this is a great question, Dale. Here is the issue. Because shale is not going to deliver, then market balances in the forecast are going to be messed up. And therefore, we are going to be short oil because that crude is not going to be there. At the same time, we have no replacement because they already scared investors worldwide not to invest because of shale. So we might end up with an energy crisis, and I'll explain the demand side in a few minutes. But what we are going to end up with is oil price, let's say, at $90 That's, I'm talking about Dubai and Oman and Arab Light, while frackers in West Texas will be making only $40, like you said.
Wow.
$40. So the price differentials will be unprecedented because quality of crude is related to the price differentials.
Okay.
But because of the wrong forecasts, overall prices are going to go up.
Okay.
On the demand side, we have other problems. For example, they are predicting, and I'm talking about OPEC and IEA and others, they are predicting that oil demand will decline between 8 million and 12 million barrels a day in the next 25 years.
Because of electric cars?
No, because of fuel efficiency of current cars.
Okay.
This is unprecedented. We never had this improvement in history. So why we are going to have it now when technology has peaked? We are using lighter metals. That's why technology peaked, because there are no other options. So we are using lighter metals. To move to a lighter metal, if you take the Ford 150, for example, the cost might go up by 50%. And Ford will never do it because that's their best-selling truck. And we ended up with smaller cars, but those smaller cars cannot get smaller than our bodies. So we maxed on technologies.
I've sat in a few of those.
Yeah. And, so there is no way. And if you look at the current trends in transportation, whether in the US or China or other places, everyone is moving to crossovers and SUVs.
That's
smaller
true.
cars, the sales of smaller cars been declining for several years. So when you look at the average fuel efficiency, here in the United States, we've been flat for the last 6 years. So that predicted decline is not going to happen. And therefore, demand is going to be higher for oil. On electric vehicles, we do have some serious problems. Now, I am for electric vehicles. I support electric vehicles. I would love to have one. I don't mind owning one. But I am against the hype of the impact of electric vehicles. So I'm not talking about the hype of electric vehicles. I am talking about the hype of their impact on the oil market. For God's sake, some people are predicting that oil demand will peak next year.
Mm-hmm.
That's how how high the hype is.
So putting out this narrative, you would think it would be producers putting out this narrative so that
no, not really. There
same.
are a couple of research places and couple of kind of agenda-driven research centers basically are producing them. I am not going to name them here on the air, but they know. But just to give you how bad the narrative is, they tell you that LA in California is buying electric buses. And then in their reports, they show you how much oil they replaced in California. Here is the problem. There is no single bus running on diesel in LA. All of them are running on CNG. So basically, it's a lie.
Okay.
The electric buses are, in some areas in the world, are replacing gas buses. Gas, what I mean is natural gas. That's compressed natural gas, CNG. It's
okay, so I mean, these mainly have to be environmentalists that are so against carbon, anything carbon related, that they're actually propagating things that say we're not going to need oil, which leads to malinvestment or no investment in refineries, and the quality of our oil fracking is dropping. So it looks like we have a perfect storm brewing in the crude oil market. You have most people bearish crude because they're worried about recessions. What you're saying is you're building the case for looking for the right oil assets to own for when this narrative is exposed for being a con job.
But there is an irony here. The irony is, if my theory is correct and the demand for gasoline is going to be higher because the efficiency, the fuel efficiency, and because of electric vehicles, then the demand for shale is going to go up. So all of a sudden, shale becomes really the place to go back to, because with shale, we produce a lot of gasoline.
Okay.
So in a sense, it looks in the beginning of this cycle that shale basically will suffer. But after a while, all of a sudden, it is the oil to go to, because we need a lot of gasoline to fill in the gap.
So it's kind of like the silver of the precious metal complex, poor man's gold. And eventually we go to it because of what it could do, and the price makes it attractive.
Yes.
Okay,
Yes.
very interesting.
And one more idea on EVs. If you go back to 2007, 2008, everyone was talking about natural gas vehicles.
Right. That was
and we used to do modeling basically, and the forecasts were almost similar to EVs today. I mean, not as much, but that was like
a T. Boone Pickens initiative, wasn't it?
Absolutely.
Okay.
So what happened right now is some of the forecasts for electric vehicles are taking over the forecast of natural gas. And therefore, the oil demand is going to be way higher than what people are expecting, because it's really the impact of electric vehicles is on the natural gas market and on what was going to happen in the natural gas market that did not happen.
Okay. So I really think that I have a main theme that you're talking about. Do you consult people besides your speaking engagements on what areas of investment they might want to start looking at or considering?
Yes, but mostly
not in public.
Not in public, correct. And
okay.
And the whole issue, I mean, here is the bottom line. The bottom line is, for the initial period of this crisis, all of a sudden, Canada, California becomes the hotbed for investment in this case, because that's the oil that everyone needs.
Okay.
And in the second cycle, we go back to shale. And that's why I predict that we are going to have multi-peaks in shale production instead of one peak.
Okay. So any kind of time horizon for the different phases of this cycle?
That's very tough. And whatever I say,
that's the art of it, right? I know.
Correct. But I think we already, in terms of quality of shale and crude quality, the cycle already started. The reason why the industry is suffering today, because of the quality of shale. The reason why we are having some problems in refining today and why refinery utilization is low is quality of crude. So the cycle has already started. But in terms of where the general media and the general public will start talking about it, probably we need another year or two.
And what kind of price for WTI do you think we'll be at? I mean, we've been range bound in this market for such a long time, Anas. Do you have a bias for price movement at all in the crude market?
I'm going to say something that probably will shock some people, but once they think about it, they will understand. Right now, the way we see it is, we have a decline in seasonal demand in the first half of 2020.
Okay.
And that's why OPEC cut production.
Okay.
The problem is, we are going to see changes in the second half because of the US presidential election. Whether we like it or not, the oil industry in the United States and overseas is a Republican industry. This industry supports Republicans.
Okay.
And we have seen in the past, with the election of George Bush Sr. or George W. Bush, that countries increase their production to lower prices to support the election of those presidents. We've seen those presidents using the SPR, the US SPR, to lower prices.
Right.
So while we can make a very strong case, very strong bullish case for oil in the second half, the presidential elections are going to ruin it.
Okay, why? Because you're predicting Trump won't be reelected?
No. But for Trump to be reelected, he wants lower prices, and he's going to get some cooperation from some oil producers outside the United States, and he's going to use the SPR.
Well, the Saudis could do no wrong with our current president.
Absolutely. Absolutely.
Okay.
But the idea is, it has nothing to do with Trump, by the way, because it has to do with a Republican president.
Yeah, I mean, he says he is.
Okay. What I mean is, if there was someone else in office but Republican, they will do exactly the same.
Okay.
But the idea here is, we do have enough evidence to show a bullish case for the second half of 2020, but presidential elections, given the history, we are going to see some relaxation of the quota in OPEC, and we are going to see a big release of the SPR to maintain prices probably around current levels.
Okay, so they want to just peg it.
Correct.
So we're going to say pegged in a range through the elections, and then something else happens.
Correct. By that time, everything might explode on both supply and demand sides. At the same time, we have to be very careful. Here is the other shocking piece of information. China built a massive strategic reserves. Here in the United States, those strategic petroleum reserves are regulated and heavily regulated. So they are released only in case of emergency, or if the Congress agreed to finance the management of the SPR, that the strategic petroleum reserves.
Okay.
China does not have any regulations. And they bought that oil at $40 and $50 and $60. If oil goes to 85, they are going to sell most of it.
Okay, because it was a hedge for this, or a trade.
Correct.
Or was it just a trade?
It is just a trade. It's about money.
Okay.
Because they have no regulation. So what happened is, our upside is capped by China.
Interesting. Okay.
And what
Because I mean, they've been stockpiling wheat, but and gold and everything, but the wheat I don't think was a trade. It was a hedge against famine, which they're having some trouble with their food supply.
That's possible. Yes.
Yeah.
But for oil, the idea here is they can dump that oil in the market, and here this is going to be a kind of a double-edged sword because to the oil market. Because that's going to reduce China imports, because they are going to sell it in the domestic market first.
Okay.
So we are going to see increase in supply and reduction in demand at the same time.
That would augur for $30 crude.
Not really, but at least when we hit 85, for example, that's going to cap it and reduce it back.
Okay. So you see 85 as a ceiling coming into any type of bullish, constructive bull market. 85 is your number.
Yes.
Okay.
Yes.
Well, I was going to ask you a few things, but time's wrapping up. It was fascinating talking to you. I enjoyed hearing the narrative. I learned, we can learn from everybody, and really appreciate you coming here to edify our community and us, and everyone. You could follow us on Twitter. It's his name right here. See it? Just put the @ sign here. And you could go to his website as well and take a look at some of his videos. He has some pretty interesting stuff. I'm going to check this one out later. Is Trump an anti-oil zealot? So we'll see if that he's an exception to Republicans. Anyway, this is going to be a wrap, everyone. Good luck on the UK election. One last question, Anas.
Sure.
Does a dollar or currency play into your equation when you're talking about forecasting what could happen to energy?
Big time. And on my website, there are a couple of articles, and some of them are in foreign languages, including Arabic. And there are, I think, $1 article is published in 6 languages.
Okay.
People can check it out. Yes, it plays a big role. In short, lower dollar, basically.
Higher prices.
Correct. And there are
nominal
reasons for
gains.
that.
Yeah.
They are explained in those articles, what the dynamic and how it works.
And the petro currency is safe as long as Trump is in office, because there has been talk over the years that eventually Saudi may de-dollarize their oil sales.
I explain in those articles why they cannot. There is no way they can. There is an article on the website. I think the title is "Why Does OPEC Price Its Oil in Dollar?"
Okay.
And it explains the reasons why they cannot switch.
What a great interview. I hope we could do it again, maybe early next year. Anas, I really appreciate it. Anyone who comes on this show, I call them my trading warrior brothers. So like it or not, you are one now.
Oh, thank you. Thank you very much. I'm honored.
Okay. And I'll just end this with, remember, don't just count your barrels of oil, count your blessings. Inshallah, Anas.
Inshallah. Inshallah.
All right. See. Okay, everyone. We'll see everyone tomorrow. Good hunting. And that's going to be a wrap for me and you. Thanks again, Anas. Bye-bye.